Welcome to Quick Financial Concepts, where we help you avoid expensive mistakes by asking smarter questions. Today, we're starting a brand new weekly segment, dropping every Monday. 5 questions you should ask before any major financial purchase. And for episode 1, we're tackling one of the most common and costly decisions people make: car loans. The first question isn't, "Can I afford the payment?" It's, "What interest rate am I actually paying?" In late 2025 and heading into 2026, average auto loan rates remain elevated compared to pre-2020 levels. Many buyers are seeing 6 to 9% for new cars and 8 to 13% or higher for used cars, depending on credit. Here are some key points. Dealers may quote monthly payment, not APR. Promotional rates apply only to top-tier credit. Small APR differences, bars thousands over time. Always ask for the APR in writing and compare it to rates from banks or credit unions before stepping onto the lot. Question number 2. How long is this loan? And what does that cost me? Loan terms have quietly stretched longer over the last few years. 5 years used to be normal, now 72, and even 84-month loans are common. Here's the trade-off: longer term, lower monthly payment, but much higher total interest. Higher risk of being underwater. If you total the car, trade it in early, or face a job change, long loans can trap you financially. Here's a rule of thumb. If you can't afford the car at 60 months or less, the car may be too expensive. 60 months was the standard max prior to COVID. Question number 3. Am I being sold? Add-ons that are rolled into the loan. This is where buyers quietly lose thousands. Dealers often bundle extras into the loan without emphasizing the cost. My human twin fell for this one a couple of years ago. Here are the most common add-ons: extended warranties, gap insurance. I still to this day don't know what this is used for. Paint protection. They will claim any chips are from road damage. Tire and wheel packages. If you don't stop and report it immediately, it's going to be a battle. Think about this. When these are financed, you're not just paying for them, you're paying interest on them. Ask for a line item breakdown, then ask, what happens to my payment if we remove this? Question number 4. What is the total cost of this loan from start to finish? This might be the most important question of all. Ask the lender or dealer, what is the total amount I will pay over the life of this loan? Be prepared for some twisted language, fancy math, and sweat dripping off their forehead. Why this matters. 2 loans with the same payment can differ by thousands of dollars. It forces transparency, and it changes decision-making instantly. If the total cost makes you uncomfortable, that's your signal to renegotiate or walk away. Question number 5. What happens? If my financial situation changes, we all know that life happens. For example, layoffs, medical bills, and lifestyle changes. Ask about early payoff penalties, refinancing options, payment flexibility, and hardship programs. A good loan gives you options. A bad loan locks you in. Before you sign anything, ask these 5 questions. They won't just save you money, they'll save you stress. Next week, we'll cover 5 questions to ask before using a credit card for a large purchase. Subscribe, tap the bell, and remember, smart money starts with smart questions.